Hi everyone, first of all, thanks for waiting. Last couple of weeks were a little hectic for me on personal front and could not release a video. This week is a special video very close to my heart as well as probably all of you, because either all of us are in this storm with our boats, which means we are invested in the markets, or we are waiting outside with our boats waiting to put in fresh money. In this video I'll talk about geopolitical situation, because this fall is not just India, it is the globe. Let's get started. I'll first start with Russia because that is among the biggest participants of the current turmoil. Now, one thing which many of you may not know is that the conflict actually did not start 2-3 years back. It started with what is today called Revolution of Dignity. The anti-Russia feeling in Ukraine began at that point of time, and it is speculated that there was an EU or a Europe involvement in that. And that is where actually Russia took notice what NATO is doing, what Europe is doing. Note that Ukraine is one of the richest countries in terms of agri-commodities, and it is in general rich in minerals. If you look at the map itself, this is where Russian boundaries are. This is approximately Ukraine. Belarus is an ally of Russia. Latvia, Lithuania, these are a part of NATO. Finland, Sweden, Norway, they are EU and NATO. One thing to notice, Russia has limited boundaries to Black Sea, which is an opening to Europe to a very large extent via Istanbul. Istanbul has a very important role to play in the overall geoeconomics. There is one particular entry here also, St. Petersburg, that is a major export area, but this is a huge kind of path through the English Channel. So this is the English Channel between UK and France. This benefits UK, Ireland, France, some countries, but this part of Europe is not covered. That is why getting access via Ukraine to a larger border is in Russian interest, and also in some ways take revenge of Revolution of Dignity. Point number 2, for last 4 years before Mr. Trump came back, it was widely talked about point between the animosity between Russia and US. But note that President Trump and President Putin are friendly. They are at talking terms, they negotiate, they are willing to cooperate with each other also in certain matters. Now suddenly, for example, both Mr. Putin and Mr. Trump are talking about ceasefire, close the war. A lot of people, including Ukraine, are suddenly unhappy that why should we end the war now? A lot of Europe, including Ukraine also, they seem to be looking forward to continuing the war suddenly. A ceasefire is on the cards, but there will be terms and conditions to it. And those terms and conditions will not be acceptable to EU in general. These will not be good for NATO in general. This also leads to a lot of economic decisions to be taken. For example, Russia may get sanctions lifted. That will have a huge impact on the overall economic things in the world. Some of these decisions will be good for certain countries, some of them will not be so good. For example, Russia will be able to sell oil and gas again at its own terms. This will not be that great for Middle East. Point number 3, if you see this graph, this is the natural gas prices globally. This is approximately where the Ukraine war started and the prices went up through the roof. That is because Russia is a major supplier of natural gas globally, exporter. Suddenly $2 became $9. What did it do to the inflation in EU? No one wants a repeat of this particular situation. $75 trillion is the natural reserves of Russia as per the estimates. Russia is the third largest crude oil producer, 12% of global supply. Diamonds, natural gas, a lot of metals, minerals. The world needs to control inflation right now. The world needs cheap minerals from Russia. At least it does not want the supply to vanish, which could lead to extraordinary prices for say crude or other minerals, metals, etc. Russia coming out of sanctions should be good for inflation control globally. The fourth point is related to BRICS. BRICS, remember, started with Brazil, Russia, India, China and South Africa. That is no longer the case. The world population, in fact, is not represented any longer by G7. It actually never was represented by G7. BRICS represent a much larger participation of the world population. And note that even the economics is changing now. And with US abandoning Japan and Canada at this point, if these guys decide to leave G7 and join BRICS, then there is no longer a concept of G7. And in continuation to the previous topic of BRICS, let's also talk about NATO in the Russian context. Russia and America in general have abandoned NATO completely. They don't want NATO. America is already threatening to stop the funding for NATO. It probably has already in principle done that. Canada is not talking about NATO at all. Greenland is perhaps going the US way. So NATO is effectively Europe and Japan on the other side of the globe. Now, historically, NATO has run many programs across the world. Some of these are also called peace programs. So if NATO is abandoned or weakened, then it may lead to a lot of geopolitical tensions across the world. This will definitely impact the economics or the economic cycles across the world. Let's talk about China next. Now, China needs access to Europe. It's a big market for China, and China also needs access to US, which is somewhere further west from here. How do Chinese goods go to US? Right now, the only way is via this particular route, which is Malacca Straits, down from Indian Peninsula across Gulf of Aden, Suez Canal. Here you reach Europe, and then you exit Europe and go towards US. It's a long route, but there is not much of an option. You can't go up. This particular part is frozen. This problem is also there for Russia to a very large extent. Now, a lot of you might suddenly say, why go west? You go east. So the east part is effectively New Zealand and Australia only. This is China. This is the other coast of United States. This is Los Angeles. So you have to nearly cross the entire globe to use this particular route, which is not economically viable to a very large extent. So China is trying to create railroads or normal roads from China to Europe via a lot of other countries. So this is the Middle East part, and then also the Europe part. That is one initiative. It is also very aggressive in this part of the world. A lot of part is under India. So you might have heard of a lot of conflicts. The real reason is they want access to Bay of Bengal, a quick access, so that they don't have to traverse like this. That is why there is a lot of conflict in, say, Myanmar. This is again a shortcut to Bay of Bengal. Now here India has their ships positioned, Malacca Strait. This is where India takes care of its interest, and to safeguard their interest, China is trying to create a lot of infrastructure in Arabian Sea and Bay of Bengal in the smaller countries. This is where a lot of conflicts are there with the overall Southeast Asian countries. These conflicts will keep on increasing only because China is desperate to get access to Europe and US, its most mature markets. This leads to a lot of expense of countries like, say, India on defense. Now, this could be of interest to a lot of stock market enthusiasts because there is continuous spending on defense, and that takes the money out of the GDP or the budget for certain other expenses. One more thing is, in the last 2 decades, China has pumped in a lot of money into infrastructure. You might have heard of ghost town concept, where China created so much infrastructure, including residential infrastructure, that it is right now defunct. Ghost towns, no one lives there. One of the largest builders in China went bankrupt a couple of years back because they created so much infrastructure, but they could not sell it completely. In fact, people bought it, but people refused to get and live into those ghost towns because there was no neighbor around. So China has created a lot of infrastructure using the cash flow they were generating from their trade surplus. It's a rare term because not many countries have a trade surplus right now, and that is going to a waste literally. Factories have to run to a capacity. So China's ghost cities, ghost infrastructure, number 2 point right now, it is very important, and China needs its industrial revolution to continue. The direct side effect of tariffs right now imposed by Mr. Trump is that the manufacturing cycle may come to a grinding halt in China. Not many of you may know that as a direct impact of China plus one impositions, China stopped sending a lot of parts to India, where India was taking those from China and using them to manufacture iPhones in India. I don't know whether it is resolved or not, but this became a big problem 1 or 2 months back. China will not take this kindly. China will not go down without a fight. Manufacturing cycle, China will prevent as its forte. This is the only thing China does right now. Think about a situation where Mr. Trump says we will impose tariffs on China and China says we'll not manufacture your iPhone. You go and do it yourself. It will take US and India and whatever other countries to at least 4 or 5 years to set up this capacity. It will lead to a collapse of Apple, which is a $3 trillion company and a significant source of taxes to US. US can't afford to live without China. These tariffs will lead to terrible inflation for US. One big thing for China is that the alliances of China have become totally confusing. Think of it, Russia and China are allies. India and Russia are allies. But whenever India is under threat from US, India immediately rushes to the US side. Maybe there is a silent pact between India and Russia that okay, I'll be with US for some time, but you are my friend. Now if India and Russia are friend, Russia and China are friend, is India and China friend? No, definitely not. And now if Russia and US are friends suddenly and US and China are not friends, then what happens to Russia and China's friendship? Next 5 years will be the times of confusing alliances. Not everyone will climb the tallest building and loudly shout tariffs, tariffs. A lot of people will do stuff silently behind the curtains, and that will impact the geopolitics and economics across the globe. In a nutshell, the final point for China, when you have kicked every dog on the street, there will be a day when every dog will unite and jump at you. This is probably going to happen to China sooner than later. Every country in Southeast Asia, for example, right now is suffering because of China. One is they have to spend money on warfare. Second is China is continuously a threat. China is acquiring companies, ports, China is giving them soft loans, and in the garb of it, they are acquiring a lot of resources. No one is happy. Taiwan, the conflict has always been there. There has been a war brewing for probably a decade now, if not longer. And considering the China's capacity dependence on manufacturing, this will be a downward spiral. See here, China's markets have been stagnant for more than a decade. The GDP since 2021, after the pandemic rise, that is stagnant. Next, let's talk about the all-important Middle East. And the interesting part is, Middle East actually is not the middle of East. It is the middle of the world. That is why it is a significant travel route for everyone. And Middle East is a lot bigger than a lot of us think. It ends at Tehran, there is Iraq here, there is Turkey here, the entire Lebanon, Israel, Jordan, Palestine belt, then there is Egypt here, and then there is Saudi Arabia, Oman. Most people know mostly about UAE, and that is very small. Many people don't even know that Bahrain is an island, Qatar is very small. And then you have Yemen, where there is a lot of conflict, and there are a lot more countries here which are a lot smaller in size. For example, Cyprus. And Middle East has a significant demographic importance. One main reason is the Egyptian Suez Canal. Yes, Suez Canal belongs to Egypt. See, this is where Egypt's jurisdiction ends. This is Suez Canal. This is not Israel. This is among the densest trade routes. This connects US and Europe to India and China to a very large extent. And in fact, a lot of Middle East countries like Saudi Arabia also, they have to cross the Suez Canal with their crude oil. A lot of you might have heard of the Iraq and Kuwait war. See, this is the small exposure Iraq has to seawater. The conflict with Kuwait, in my opinion, was always about increasing the overall exposure to the Persian Gulf for Iraq. In the end, it is all about controlling critical resources and the money. Think about it. Saudi Arabia, one of the largest members of this particular pack, which is called OPEC. They have only two exits. One is via Persian Gulf. This is where Iran is. And second one, you have Yemen here, right at the Gulf of Aden. So you could go to Europe, but you can't go to India and China without passing Yemen, where there is a lot of conflict happening. That is why you will always see Saudi Arabia staying out of most conflicts. They never speak. Yesterday only, there was a lot of bombing done by US in this particular area. US is again getting active here. See, this is all about having friends around the Suez Canal. This is the other route, Istanbul. Significant Russian exports go via Istanbul. That is why it is required. It is important. There is demographic importance of Turkey, just Istanbul. Point number 2, crude prices versus inflation. In the pandemic, crude went to actually minus 25 for 1 or 2 days, but it was around $20 at the bottom. And once the pandemic started receding, it went up because manufacturing went up. At the height of the Ukraine crisis, it went to $120. Now crude has again come down, and for a significant part since 2023 it is range bound between about 70 and 90. For last 2-3 days it is actually below 70. I'm talking about Brent. If you look at the overall impact, the large companies deals with crude, Saudi Aramco, they have sharply lowered the dividend payout to the government. This is a significant source of revenue for the Saudi Arabian government. If you look at the oil stocks in India, they have been sulking, suffering, bleeding. For 2-3 years, we obviously had a local phenomena called windfall tax. Note that somewhere around $70, suddenly companies are no longer profitable, or profit becomes so minuscule that there is no capex possible. All oil companies want crude to go up at least 80, 85, those levels above that. That is where the inflation starts picking up. 100 is where inflation explodes. This is not a sustainable zone. But US wants to export oil, Russia wants to export oil, and Middle East wants to export oil. All three of them are in some ways allies or friends right now. Somewhere I think crude prices will go up. This impacts the oil prices, especially the E&P companies. Marketing companies will depend upon the price hikes in petrol and diesel. Now, comical part in India is while the prices of crude have come down significantly, the domestic prices have already not gone down at all. So if crude goes up, what will happen to oil marketing companies? In my opinion, somewhere around May or June, you will see crude easily about 85 maybe. Note that a lot of challenges in the US, in India is leading to a lot of intellectual movement towards the Middle East, especially Dubai. Now, Dubai is not very big to attract significant businesses. But think about it. When you talk about India, say Mumbai, say Delhi or Chennai, Hyderabad, Bangalore, these are major sources of revenue. Why? Not all companies are present here, but this is where the registered businesses are. So GST is marked against, say, Mumbai, against Delhi. The tax collection happens in these locations. So if Dubai becomes a hub for very high ultra net worth individuals, and a lot of businesses are registered in Dubai or the Middle East, some more locations, then most of the money globally will flow via Dubai. Even 1% tax will attract a lot of money. That is where there is international growth opportunity, and that is what Dubai and Middle East are taking very seriously. Even US has now started this $5 million net worth. You come and we'll give you green card. This is where India is losing big time. While the people who are moving are a handful, but the business and the income they are taking to Middle East or to Singapore, that is huge. Does Middle East have to worry about life beyond crude? Yes and no. I don't think crude will get replaced at least for next 10 or 20 years because there is abundant supply left. However, a significant part of the consumption will go to EVs, maybe hydrogen vehicles, maybe some new technology. But EVs have to evolve significantly a lot. Right now, the EV battery is not sustainable. And also one more problem is because of the EV bandwagon, crude will never probably go to 120, 130 in the near future at least, unless it is temporary because of a major crisis. That will be mostly driven by short supply, not demand. So crude will remain range bound somewhere between 70 to 90, 95. The fifth point, there is a price of conflicts, and mostly these conflicts benefit the people who recreate the public infrastructure. Most of the regions devastated in these areas, be it Iraq, Iran, there is a Syria somewhere around here. A lot of that has always been involved in some ways or the other with the United States of America. It is all about trade routes, critical resources and money. The price of conflicts is paid by the locals, and the abundant minerals of these regions are plundered by some countries after the conflict ends. The countries who get these minerals for dirt cheap prices and the contracts to rehabilitate these countries, they emerge as the winners in the end. Their economies go up and they turn up with a significant uptick in their companies, stock markets, businesses. Saudi Arabia has the densest proven oil reserves. Then you have Iran, and then you have Iraq, and then you have Canada. US has less, China has less, India has even less. This particular belt has most oil and infrastructure already created to harvest that oil. The conflicts in this area is about the control on trade routes and the oil economy. As Mr. Trump says, let's make America great again, or MAGA. This was the war cry given by Mr. Trump ahead of the elections, and that did play a big role in sentiments when it came to voting. Let's talk about USA next. And I'll directly jump to the most important point right now, debt refinancing. US has about $7 trillion worth of debt, which the government has taken from the treasury, that the government has to repay to the treasury. Now either they have the money and they pay back the debt and say it is done from our side, or they refinance the debt. That debt suppose is another 10-year yield. So that will be refinanced to be paid in 2035 of the same size. Now it is not that simple, because when this loan was taken some time back, this was at say 1 or 2% interest rate. Right now the interest rates are approximately 5%. For $7 trillion size, this 3% extra interest rate is going to create a lot of outflow for the US government. What does the US government hence need? They want the interest rates to go down. How will the interest go down? When Mr. Powell says that the inflation is under control. Inflation is refusing to go under control. It is low, but not at the level where Mr. Powell wants. The other route is government says that the country is under a recessionary condition. So the Fed chair has no option but to lower interest rates to revive the economy. So right now, before this refinancing happens, in my opinion, the US government is in overdrive to take its own economy down to its knees. Yes, Mr. Powell could tomorrow say that yes, if you are going to kill the economy to make me reduce the interest rate, let me do it now. But he is not willing to do it right now. There is no other option. And Mr. Trump cannot fire Mr. Powell. These bar graphs are not that high, which means the future refinance needs are not going to be as high as we have right now. Now let's talk about tariffs. Are the trade deficits real? That is because tariffs, in my opinion, are future inflation. And by the way, this is beautiful data from Trading Economics. This is the imports into United States, and these are exports out of United States. So Mexico, US is importing 16% of their imports from Mexico, and out of US exports, 17% go to Mexico. With China, 14% of the American imports come from China, only 7% of exports go to China. This is the deficit Mr. Trump is talking about. Specifically with China, China is exporting double the amount it imports from United States. But for countries like say Canada 17, 13, Mexico 16 and 17, these are not very big numbers. Let's say India 2.1, 2.7. Yes, in terms of contrast of 2.1 to 2.8, this may be big for India, but it is not big for US. There is no point putting India under sanctions, for example. This is too small to create a material difference to the United States balance sheet. Also, these tariffs could lead to an isolation, because each and every country is being kicked by Mr. Trump right now in the name of tariffs. So Mr. Trump may want to tread a bit cautious here, otherwise he might end up inviting a lot of inflation, and by the way, that will lead to Mr. Powell not reducing the interest rates. Let's talk about the third big one, which is the AI bubble. This, in my opinion, has the largest potential to bring down the American economy. Let's first talk about the impact of AI on the world. The top 5 problems, and your list could be different from mine, is clean water, clean air, jobs, poverty, income equality, climate change, and inflation. Tell me, which problem does AI solve? In fact, in my opinion, AI increases a lot of them. Look at these companies, the top companies by market cap. Apple, they're saying Apple Intelligence. Nvidia is all about AI. Microsoft is talking about AI each and every time. Amazon, 25% of it is probably trying to be AI. Alphabet, AI. Meta is AI. Berkshire Hathaway is staying away from AI. Broadcom, in some ways, chips. So AI, Tesla is all about AI. Large extent. If this bubble bursts, then a lot of them will lose a lot of money. Nvidia may lose more than 50%. Then we are not even seeing the power companies which have invested a lot in capacity. In some ways, AI has become too big to fail right now globally. The impact of America abandoning alliances on NATO, Japan, Europe, in some ways India, most of these are allies. So for example, this news, Trump considering major NATO policy shift. Elon Musk supports US withdrawal from NATO. So Mr. Macron, he's taking a lead. France in any case is a nuclear enabled country. They are a developed country. They have some sort of money also. So maybe something may emerge out of Europe suddenly. which is led by France, and they say we no longer care about US. It may take them 10 years to get away from US, but if they decide to move away from US, it may lead to a permanent change in stance. Many of these alliances are as old as the World War I and II. This could lead to a systematic meltdown in the United States of America, especially if it ceases to become the reserved currency of the world. The only option which will left with Mr. Trump is whoever tries this, I will declare war on them and send some big warships or nukes their way. Debt that cannot be paid. US consumer debt has climbed to nearly $20 trillion right now, and the overall national debt I think is in excess of 40 trillion now. Approximately, these numbers keep changing nearly on a daily basis. What that means is American citizens own nearly $20 trillion to banks, credit card companies, and so on. This is the amount of advance spending they have already done. This also includes mortgages to a very large extent. This is the first biggest item. Mortgages is actually the largest item. Even the US government owns $40 trillion to the treasury. And by the way, most of those bonds are owned by China, which can twist US arms many times. So government has spent $100,000 per citizen without even the citizen realizing. Citizens are taking more and more loans to pay the previous loans. Government is taking more and more loans to pay the previous loans. There is no end. It will lead to a situation where suddenly there will be a crisis, where there will be a crash. A lot of default will happen at personal level and government level. That is where US will lead all credibility. Am I predicting this to happen in say next few months or years? Probably not. US will keep on printing the money till there is a meltdown. At least till there is a formidable player to make that happen. The US is also sending a lot of people out of the country saying that these are illegals, which is fair. But they are also challenging a lot of temporary position, saying that these people are not US citizens. So this is the H1B crisis, where Amazon last year, for example, hired 9.3k people, Infosys hired 8.1k people, Cognizant hired, and so on. Each and every tech giant is hiring people from outside in the US. Now, who's getting the green card? This is slightly old data. So Mexico people are getting the highest number of visas. This may change now after Mr. Trump has come back, and India also will probably have reduced quota 127k. Now, while this may sound great for American economy, but let me tell you, historically this has never worked for America. Most of the time the jobs, the divisions completely moved to say India or some other Southeast Asia country. This happened in year 2000. This happened after the 2008 crisis, around pandemic also. There will be an exodus of jobs and even departments, companies to some other location. It could be India, it could be some other country. In India, it could be Bangalore, it could be non-Bangalore. So if they were to give merit-based visas, then a lot of high-tech people will stay back in US or move to US. That will lead to higher income tax, that will lead to higher purchasing power, more homes and more cars will be bought, and so on. America should welcome high-tech people, not turn them away because they are foreigners. And by the way, Mr. Musk has always been against what Mr. Trump is doing right now. He welcomes immigrants. The final part, let's talk about India. We just completed the Mahakumbh, or the largest Mahakumbh of the country. Crores of people washed away their sins and they are pure now. What is not pure or what is not fixed even via Mahakumbh is the job situation, poverty, education, inflation, housing, clear water, clean air, corruption, peace. Effectively, every problem which is not to be solved by a common man, that still remains. Welcome to India. I've talked enough about lack of public spending in my past videos, so I'll not talk about it. But now that drought has hit consumption and the consumption confidence severely. If you look at my dashboards, for example, all the consumption related companies, most of them are in deep reds. About around Diwali time, all of them were green, which means they were hitting 52-week highs. Consumption, one bad quarter is already registered, second one perhaps is coming up. Some companies may see better results, but many of them will probably see worse or similar not so good results. I personally feel that in the times to come, at least next few quarters, and I feel 2, 3, 4 years, the consumption will take a hit. So if the consumption, let's put a number to it, say it was 100 units and it was growing at say 15 units every year to 115. This could become say 105, maybe 108. This could temporarily become say 95, 90, 80 for some companies also. For example, Asian Paints had this phenomena. Does that mean it will always remain low? No. Someday Asian Paints also will go to 150. That will reflect in the stock prices. But the lack of growth or slow growth will reflect in P. And that is something I discussed in my previous video also. Many companies or many startups which are going through an investment cycle right now, and I saw that phenomenon happen severely in 2008 times, those will have to close down because they will not be able to service their debt with their cash flow. Also, in these troubled times, capex will go down. Inorganic growth with cash-rich companies will be the mantra. For example, HUL, they acquired Minimalist in the previous quarter. Cash-rich companies will grow inorganically. Their stock prices will reflect that. But in general, consumption, which drives the Indian economy to a large extent, especially rural, that is not going to be good. That is not going to be the driver going forward. At least few months, quarters, year, a lot of it will depend upon the government policy action also. But for that, government will have to print money, which will lead to just postponing the problem forward. This may sound a bit controversial, but the GDP is growing because of the money supply increasing, in my opinion. No, it is not completely that we are not growing, but the currency printing has had its impact. Also, thanks to GST and a lot of digitization around, say, demon or even pandemic, that has led to a lot of cash transactions which are not registered with the government coming under the ambit of government policies. As a result, they now count in the GDP. So it is not that that business was not there earlier, but now it is in the formal economy. As a result, it reflects in the GDP now. So that started happening somewhere after 2017. The growth reflects both money printing and the formal economy getting more contribution from the otherwise cash segments. Also, if you look at the infrastructure contribution, a significant money has been spent on, say, airport upgrades, train upgrades, highway upgrades. Do you see flights cheaper? Do you see more capacity in trains? Do you see faster trains? Most people are complaining about too much tolls on highways. Flight tickets are really expensive, though crude is really cheap. People are not even preferring trains right now because there are a lot of accidents and a lot of trains don't have capacity. Same amount of people are traveling by trains at a higher price at the same speed with upgraded trains. This is very low contribution to GDP growth despite a huge ton of expenses. Is this wrong? No. This has to happen. The government is right in doing this. However, the price which citizens are getting or paying for these services, despite paying a lot of income tax and a lot of GST, is huge. For example, the tolls on highways, despite paying so much vehicle registration taxes, so much insurance cesses, so much income tax, why have so much tolls at every 2 kilometer, 5 kilometer, 20 kilometer? Similarly, airport, just a taxi entering or using a parking lot in a large airport costs 500 rupees for the taxi driver. That is passed on to the consumer only. There is no option for consumer but to take a taxi where 500 rupees is going to the airport authority or the operator. 500 rupees per taxi, per entry. There is a lot happening at the government level right now, and I've created a lot of videos around it, especially around the election times. What will happen if there is a coalition government? What will happen if there is a majority government? Government continues to be in the election mode, and that was reflective in the budget, where 4 out of 5 items were for Bihar, where the elections are there in November. After that, we have the all-important election in UP, and the government wants to win both of these elections. Why? That is because the votes are in this particular belt, which is the population density map of India. This is where maximum voters are. This area has the lowest per capita income in the country, but the highest people. This is where the per capita income is, but the people are less. This is leading to a lot of north versus south debates in the name of languages, income disparity, and so on. And this is going to become a huge boiling problem going soon. Government is not able to raise money from PSUs via divestment. It has not worked for last few years. PSU performance also is under the radar right now. A lot of it got fixed, especially in the banking industry. But if you see now, the public sector banks are all red. And we are right now not even acknowledging we have a recession. All the railway companies are in red. If railways are doing a fantastic job right now, how come each and every company related to Indian Railways is red besides Transport Corporation of India, which is also trucks? The fourth point, FII versus DII, the all important number. There are enough memes around what the FM said in the parliament about FII is going and we have enough resilience. All those are memes. Note that FIs don't care for any such statement. They are here to make money. Right now, what they see is that the taxes are high, the dollar index is not in their favor, and the forecast consumption is not looking good. Are there better opportunities right now? They are seeing opportunities, say, in China right now, which is a lot competitive stock market. So that is where they are going to China. If China slows down because of Mr. Trump, they will come back to India. That is pure economics, pure money making. One thing to note is that the DIs have been investing from the top of the pie while it was falling. And they were also investing when the markets were going up, when FIs started selling. DI per size is what you give to them to a large extent via, say, LIC policies, deposits, mutual funds, and so on. If retail decides to stay away from stock markets, then DIs will not have fresh money to invest. This will lead to a systematic problem. If FIs continue to sell and DIs have limited purse sizes, then there will be a collapse with no buyers. This is what is preventing the collapse right now since last 1 year or so. FIs are trying to get the markets down to its knees, but DIs are taking the markets not up necessarily, but they are maintaining the markets. This will change if DI per size goes for a toss, and this situation will arrive sooner than later. The fifth biggest one, this is my personal feeling, is that we are heading towards a housing recession yet again. Last time it came around 2012-13 and it lasted for 5-6 years. The prices have gone up like crazy. But again, if every apartment is 7-8 crores, 10 crores in Bangalore or Gurgaon, who will be repurchase them later on? What will be the rent? What will be the affordability? And the people living in them who can pay 10 crore rupees, 50 crore rupees, 200 crore rupees, do they get the amenities and surroundings and the safety net which they expect for after spending, say, 190 crores? No, they won't get any of that. At least they are not getting it today. So this particular investment by so many people, that will either go down in value or that will get stuck till inflation takes the value to their purchase prices. That rebalancing happened somewhere around 2012 also. And if real estate market goes down, then that creates a huge problem for the economy. Because real estate sector actually is the feeder sector for a very large industry. If this happens, then we are looking at a slowdown of years. The fall is real. We are looking at a global recession and slowdown right now. The stock markets are near a crash right now. Every country may not see a severe crash. Some economies may continue to go up also. That will depend upon policy action to a very large extent. For example, Chinese government is doing right now a lot of stimulus, which is also perhaps attracting the FIs right now to the Chinese markets. Demand compression is real. It is happening. It will be multi-quarter or multi-year. I expect it to be multi-year. That does not mean that companies' EPS will not grow. It will grow at a more reasonable or a low pace. Some companies will not grow or go into negative growth territory. What that means is sectors and stock specific investments will be prudent. Not everything will go up. High inflation is going to come back. Job losses will be real. Companies will close down and you will see a lot of merger and acquisition. And you already know perhaps that Mr. Buffett is sitting at $300 billion plus in excess cash right now because he knows that it will be a M&A season soon. Last few weeks I've been wondering whether we are ending the turbulent zone or we are nearing the start of another turbulent zone or a more wilder one. I took a lot of decisions for my portfolio. Here I'm sharing what I'm doing. This is not investment advice. I'm just sharing in transparency. I have moved significant equity to cash in addition to what I have sold over the last 1 year. Bonds I continue to invest. I have not reduced my appetite, but I'm being very selective about the bonds I buy. I have increased significantly on my holdings in silver and gold. Earlier it was mostly gold in my holdings. I have increased silver significantly of late. I continue to trade and a lot of my trades are on the short side now. This is very risky and should be done with a lot of caution. I am avoiding consumption stocks which were my favorite. In fact, I have sold a lot of my consumption stocks, my favorite ones, for the time. I might enter them soon. I am not trying to time the market. I'll buy them when I have excess cash and a little more confidence in the economy. I'm totally avoiding IT for now because services companies may get impacted by Mr. Trump's decisions. And if the companies like Microsoft and Google come to India, then those will be captives. They will not give business to, say, Infosys, TCS, Persistent, and so on, at least for now. I'm totally avoiding banks. I do have some investments in IB right now, but they are in deep losses. I'll probably avoid that for now till the value reflects the new volumes of the industry. And SEBI finally decided that we are done with the changes. I'm working on a shopping list, which is work in progress. Some of you may laugh over it, but I've taken up a consulting role. There is not much to do in the stock market. Why waste my IT talent? Let me contribute to something and also, as a side effect, generate some net new cash to invest in the stock markets. I don't expect this to get over in 1 year, 2 year time. My personal feeling is we are in for the long haul, 2-3 years. That does not mean markets will not go up. You might see Nifty up 1,000 points in next 1 week also, but it will oscillate up and down, overall go nowhere for next few years. And I continue to build my software, which some of you have seen on the channel. It is not public. I don't think it will be public till SEBI decides to soften its stand and NSE decides to be less strict about selling of its data. But I continue to invest in the software because it helps me immensely.